I think that the 30 to 60 unit apartment complex will always be kind of a next step up for investors, right? So much like it was for us, there will always be more investors coming into the foray that want to manage, either self-manage or get into their first kind of mid-sized apartment complex. So I think that there will continue to be, there won't be a short supply of buyers in this space.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further.
Welcome back to another episode of Weiss Advice. I am your host, Yonah Weiss. On another wonderful day, another wonderful podcast guest, we have Karl Krauskopf in the house from Auroras Investment Group. Great to have you all the way from Seattle, Washington. What's going on?
Nothing much, just enjoying a very rare bluebird day in the deep of winter, although it's been a pretty mild winter, and it's kind of shocking and alarming and terrifying for multiple reasons, but also it's great.
It's notorious for raining a lot in Seattle.
It is rain. We get some snow from time to time, but this has been what's at least felt like the driest and mildest winter that I've seen here in the last 6 years.
Right.
And typically what, that leads me to believe is either a terribly wet and cold spring or a very hot, dry, and prolific wildfire summer season.
Boy.
So,
well, I hope neither.
Exactly. I mean, we all live out here for the mountains, and the summertime is the best time for those. If it ruins it, it's terrible.
Yeah, for sure. I've only been to Seattle in the summer twice, many years ago, but beautiful city. I'd love to come back sometime soon, hopefully. But
yeah,
one of these days it will happen. There's an event not long ago that I was invited to come to and just didn't work just a few months ago. But anyways, let our listeners know who is Karl Krauskopf, because they may not be familiar with you. So I always like to give a little time for introduction, a little background.
Sure. Appreciate that. So Karl Krauskopf, again, live up in Seattle, Washington, was born and raised the very opposite part of the continental U.S. in sunny beaches of South Florida, and took us from Florida out to Dallas for a while. Spent about 4 years out there working in corporate development business strategy for a healthcare services company. Spent 10 years working with payers, insurance companies, providers like physician groups and hospitals, changing around their reimbursement model, and ended up falling out of love with it when I got too close and really understood what was going on behind closed doors, so to speak, between those two entities, the payers, the providers. And, at the end of the day, what I found was, that the consumers, you and I, the patients, we're ending up footing the bill and spending and, really allowing a lot of the profiteering in both of those sectors. I've got all my thoughts, processes, and dispositions around each of those groups. Yeah. They all provide a great service, great resource, love them. But, I was a little too close to it for comfort. So spent about 2 years in building a real estate business towards the tail end of that career. Started off flipping homes, single family homes up in the Pacific Northwest of Seattle, doing a lot of urban infill stuff, development, townhome development. We started doing a lot of backyard cottages, which is an interesting play that Seattle has specific to it, as well as obviously a couple other of the cities around, and moved pretty quickly into the multifamily space, specifically the apartment space in the Puget Sound, which is kind of the north-south end of Seattle, as well as other parts of Washington State.
Very cool. Wow. Okay. Well, that's a pretty high level overview of probably the last couple decades of your life. But yeah. How long did it take? You mentioned that even during your corporate time, your last, tail end of it, you started in the real estate game. I'm just curious, before we get into some of the other questions I do have for you, how did you even find that? I mean, was it just like HGTV? Like it was pretty popular back then?
No. So this was a total of 4 years ago. So I've been full-time investing for 2 years. And prior to that, with a 2-year kind of segue out of the corporate space.
Gotcha.
No. So what it was my wife and I were having a kid, and a catalyst of looking at expenses and understanding, both of us knew where our income would be over the course of the next, 5 to 10 years. She was in education. I was in healthcare. And in the healthcare space, you tie your salary to your time. And typically your salary and your bonuses are paid out, 12 to 18 months after you're successful and after you're performing your job. And so, I was looking at what are some other alternative ways to make income, and, so happened to stumble on small rentals, small duplex, quadplex, et cetera. And then that quickly turned into flipping homes, did a dozen over the course of those 2 years. And, from there, I saw from a freedom standpoint of time and being able to focus, I could flip 2 homes and make more than I could in my corporate space, have a lot more fun, a lot more flexibility, a lot more time. And, you can flip 2 homes and, consecutively or at the same time in the course of 6 months.
Right.
So, I saw a pretty clear and easy way to double my salary, double my income in those first few years.
Seems like a pretty smart move, especially given the fact that you kind of had the falling out with just the politics, I guess.
Sure.
The best way to say it about the corporate job.
And especially if you look at it from where we were in the market, 2 to 4 years ago, I think that was 2018 timeframe, 2018, 2019. And, the market was still on the bull run. And, from a single family home perspective in the Pacific Northwest, Seattle area, it was pretty difficult to lose money on a flip. I do have a terrible story about losing money. It was involved identity theft and somebody selling a home off market, and the seller wasn't actually the seller, and lawsuits involved, and ended up losing $50,000 on, I think that was my 3rd project.
Wow.
So after that, it was, most people would have quit, but I still loved it. I still loved the game. I still loved the hustle. Kept going.
That's unfortunate that things like that happen, but it also is important to just kind of raise the awareness, because that these things do happen, and there are people out there that are taking advantage of all kinds of people and wire fraud and all kinds of things happening. I've heard every story under in the book, and It's unfortunate when it happens to you or someone because obviously no one likes losing that kind of money. But Keep going, and it's great that you kind of picked yourself back up and moved and transitioned into the small multifamily, getting into larger multifamily now.
Right.
Our good friend Lake out there in Seattle, I assume, is pretty popular in the area.
Yep. I'll actually be going out to her event. Shout out to Lake's event and Certain Lending. And we'll be listening to Thatch Wen tomorrow night on, I think that's the 15th. Oh, by the way, happy Valentine's Day, Yona.
Okay.
I don't know if you celebrate, recognize that, but happy Valentine's Day.
I don't, but thanks for reminding me that it's today. There you go. I wouldn't have known otherwise. But it's funny, is this obviously won't be going out live. So whoever's listening to this, happy belated Valentine's Day to you. Whenever you listen to this, you mentioned about the cottages, backyard cottages in the Seattle area. And that's something I've never heard of before. So can you describe what exactly that is and why it's kind of unique to the area?
Yeah, absolutely. So Seattle, as well as many other urban areas, are experiencing affordability issues, primarily driven by supply constraints. And so one of the big things that we face here in Seattle is we are sandwiched between a large body of water and a large mountain range. So other areas you can think of kind of along the coastal regions, Salt Lake City is being another one that's on the landlocked, has the large lake and the mountains on the other side of them. But Seattle specifically has taken an approach to allow less regulation, I should say, around what you can do with your backyard. So they've opened up an ability to go in, permit, and build these detached ADUs, which isn't foreign across the country. But what is somewhat unique to the Seattle space is that you can do a couple things to those cottages. You can either do the long process of subdividing, or what's become a lot more popular here is converting your property into a condominium managed by a homeowners association. And so that gives you, as either the owner, the investor, whatever role you're playing, the opportunity to go in, install an HOA, and sell or maintain property, multiple homes, multiple structures, detached structures on what was once a single property.
Interesting. So it sounds a little complicated, meaning you would have to create your own HOA, or you would just join an existing HOA in the area. I mean, how does that work? The former. So there's a ton of attorney groups that are working on this right now individually that you can go to. It's, anywhere from $7,000 to $10,000 to install stand up an HOA, at least $7,000 to $10,000 at the time of this recording. I'm sure it'll be a lot more next year, but
the process is fairly simple, right? It's you go in, you permit some kind of structure in the backyard, whether it's a detached ADU or a separate home. But the idea more so along these lines is low cost, high volume. So it's these detached ADUs.
Right.
You essentially, again, stand up an HOA where you've got Unit A, Unit B, you've got multiple different properties. And in fact, in Seattle, they allow up to 3 separate units or 3 separate condos on a single parcel or single property. So you can go in where you had just a single family home and you can convert that into an HOA, a condominium association, and build a detached ADU and then an additional attached ADU. So the attached ADU is connected to some degree, whether it's via some shared wall, a basement unit, whatever it is.
Interesting.
So you can essentially the existing home.
So you can essentially build a duplex in your backyard.
Yeah.
And then get two renters in there.
Yep. You could do that. You could.
It's like the reverse house hack.
Yeah. I mean, it's in my mind, the way that I've talked about this a lot in the market is, this is kind of the next step, the next evolution for somebody that wants to flip. It's a lower risk way of learning how to develop ground up construction once you've done flips, right? You understand the process, the construction management process, whether you're acting as your own general contractor or you're managing a general contractor. You understand the construction process, and now it's time to go on to the next thing. The next thing, townhomes, is pretty daunting. Building an entire, 3,000 square foot single or 2,000 square foot single family home is also daunting. Yeah. But, Seattle, you can build these sub 1,000 square foot detached ADUs for, let's call it $300 to $350 a square foot, and they'll sell pretty easily for $600 to $700 a square foot. So your margin's pretty good. And if you're buying the primary home to flip it, you make a little bit of money or you break even. Right. Well, now you've got free dirt. Yeah. So your only cost in it is your soft costs, right? Your finances, your financing costs, and then your hard costs. So essentially, you could be doing this for $350,000, maybe $400,000, and turning around selling these things for $650,000 plus, $650,000 plus.
Yeah. Or, alternatively, keeping it as a rental. Obviously, that's not the fix and flip strategy, but, the BRRRR, or whatever you want to call it, is, developing extra units is just more cash flow. And it's really what it is. And
that's exactly actually what we're doing with ours is we're just refinancing them. We're refinancing them, getting a cost segregation on them, which we absolutely love. And shout out to your team for doing that. But we really like it. I think it's a great model. You can get the vast majority, if not all of your cash back out. They rent incredibly well. They hit the 1% rule, right? So right now we're in the outskirts of Seattle, the very farthest north you can go in Seattle, with still being considered the city of Seattle. We're renting it for $3,200 a month. It's a 2-bed, 1.5 bath.
Wow.
Our hard costs were $325,000. So we're hitting the proverbial 1% rule in Seattle. Our cap rate, if you will, is 8 or 9% on this, and we have no cash in the deal.
So what do you mean no cash? Is it investor money or is it bank financed?
Bank financed.
Gotcha. Private lender, something like that. That's awesome.
So we originally flipped the home. We flipped the primary home. I think we made about $10,000, which, if you're flipping a home and you're just flipping the home,
that's not
it sounds awful, right? Most of our flips were out of the flipping business, but we were, $100,000 to $150,000 per home. But on these detached ADUs, when you're going ground up, it seems so much easier because it's a lot harder to run into an unforeseen expense or an unforeseen event.
Yeah, for sure. What's surprising to me is that I've really never heard of this before. And really, it seems like this is something that really could be a great option in a lot of places. But you're saying Seattle specifically has some leniencies when it comes to the zoning processes, or just simply because of the lack of inventory, the lack of ability to build. And it still is on, it has been for a long time, still on, the growth charts of, population growth areas. It's a great city. People love it, even though there's been, some crime and that kind of stuff going on as well. With COVID, there was a lot of interesting politics happening downtown. Yep. But nevertheless, you go out to the suburbs and places where you're at, there's a lot of demand, especially with so many tech companies, Amazon headquarters, obviously, and others out there.
Yep. So 2 points to mention is on the geopolitical scene, things have got in the crime scene, things, at least from an insider's perspective and somebody who goes downtown frequently, things feel a lot cleaner. Our streets don't feel overrun by any means necessary. And it seems like a lot of law and order, if you will, has been and is continuing to be reinstituted into the city.
That's great to hear.
Well,
that's important.
Yeah, well, I'll steer clear on the political side of things, but again, it's starting to feel pre-pandemic, even the pre-mayor pandemic. So things are getting cleaned. I really love it. It's a great city.
Awesome.
Yeah.
And continuing in this route, I mean, when you talked about transitioning into multifamily, take me down that road, how you found that and what that means from your perspective. I mean, does it mean going into 300 unit syndications? Are you still working on the smaller multifamily models? And what does it look for you going forward?
Sure. So what piqued my interest in transitioning from the infill development? So last year we built 13 townhomes in urban Seattle. So this is like the core downtown areas where your walk scores are 85, 95 plus. You're building, almost zero lot line townhomes. And it was really well. It was working great. We were selling great. We were doing the build to sell and then eventually the build to rent models. And again, it was great. But this must have been October, November 2021 when we started getting some of the CPI and inflation data that was starting to become a little bit more consistently alarming. And I think this was at or just before the interest rate hike conversations became serious. And at that point, it was, hey, we need to transition. We need to look at what is a more secure asset for ourselves, for our investors to be in, and potentially, obviously, make and ride the wave of whatever is going to happen here, whether it's inflation and or the rise of interest rates. And so, we did a ton of self-education. I'll admit that before that, we only had, we had 24 units down in Tucson, but that was, split over a couple quadplexes. So it wasn't like we were in the apartment game, so to speak, or the apartment space, so to speak. So it was how do we, we really liked multifamily because we felt like we knew it from a residential standpoint. I felt like I knew toilets, I knew washers and dryers really well. And I could continue to operate in that space without learning a completely new space. I didn't want to take the time to learn a new asset type and potentially lose ground on what's going to happen with this inflation and interest rates. So again, did a ton of self-education, took about 3 months. I won't say leave, but took 3 months to really put my head down, manage the projects that we had on the plate, and really hone in on how to become a master operator in the apartment space. So it's been about 3 months. Now we're talking about early 2022. Felt really confident in our ability to take on a new project, a new apartment. We'd gone back and forth with some sellers on LOIs, purchase contracts. Nothing ever panned out. And we finally ended up landing and coming to terms on an apartment in Central Washington, a city called Wenatchee, which is the Apple capital of the world. Fun fact, I spent 7 weeks in Thailand in 2020, I think it was, right before the pandemic hit. Spent 7 weeks in Thailand and went to the Thai grocery store, and there was a box of Lake Chelan apples.
How do you like that? It was
fantastic. And they didn't taste fresh, by the way.
Wow. So one time I actually did I mentioned earlier that I'd only been in Seattle in the summer time. And when I was a kid, when I was perhaps, I want to say 9 years old, we had actually moved cross country from Boston, where I was born, to Los Angeles, California. Mm-hmm. That's where I basically grew up from the time I was 8, 9 years old. And we traveled during that summer. We actually spent a month or so, I think, with some family friends while, my parents were moving. Me and my brother spent some time there in Washington. And I actually remember, I don't remember the name of the place we went, but I do remember going apple picking. Yep. And that was, to me, that was such an incredible experience, those fresh apples off the trees.
Yeah.
Awesome.
So I'm a carnivore by trade. So I eat red meat and eggs and fish only, but I will make 2 season deviations, fresh berries. So usually in the June, July timeframe. And then one event in August, September, which is when we go apple picking. And the fresh Honey Crisp right off the tree you can't beat it.
Yeah. That's awesome.
Yeah. But yeah, the 30 unit Wenatchee was our first real true foray into, managing GP kind of, I would say still small, mid-sized apartment.
Right.
And that's the space that we're in, and we love it.
And there's probably a lot of inventory for that in the, Western, Central Washington area. I know a lot of people that have kind of properties in those sizes, from 20 to 40 units or so.
Yeah, it was certainly a popular size of apartments back in the 60s and 70s.
Yeah.
And, right now we still haven't picked up on the mega developments that you'll see in the Sunbelt region, mass amount of 200, 300, 400, 600 plus unit apartment complexes going up. We do have them and they are still going up, the mid-rises, but, not at a rate that would equate to something that the Sunbelt is seeing. But, those 30 to 40 unit, 30 to 50 unit apartment complexes, they're solid hitters. I think it's a really good place to be in as an owner, especially on the planned exit. Yeah. I think that the 30 to 60 unit apartment complex will always be kind of a next step up for investors, right? So much like it was for us, there will always be more investors coming into the foray that want to manage, either self-manage or get into their first kind of mid-sized apartment complex. So I think that there will continue to be, there won't be a short supply of buyers in this space.
That sounds pretty reasonable to me. I can't argue with that.
I'll let you know how it goes in 10 years.
Let us know exactly, right? Keep us posted on that. For someone who's gone through, obviously spending, close to a decade in the corporate space and then transitioning to something more, much more aligned with your passion. Clearly, I mean, you obviously love what you do. It shows. And for someone else who's out there thinking, how do I get started in real estate? Fix and flip. If you could go back, what would you be doing? Would you still go through that route of doing the fix and flips? Or would you go straight into like the real estate, the ground up development or the multifamily space? Maybe, just sure. For, obviously you can't go back. And I'm not saying for you to change where you would, but maybe for someone who's out there starting out and thinking where is the best place for them to get their feet wet in real estate?
Sure. That's a great question. And I appreciate the caveat on the back end. Yeah. No regrets ever. I've got those tattooed on my fingers. Not really, but in all honesty, the events that led up to where we are at right now made us who we are. So no regrets at where I started. I would say for somebody else who's coming into the space, wants to understand how real estate can improve their lives, whether through the short term and or long term, I would say the first and best place to start is the simplest, which is house hacking, right? Understanding how you can use rentals as well as forced appreciation and market appreciation. I think it's the simplest to understand, the lowest risk, and depending on your area in the country, a relatively easy or rather low barrier to entry. So in the Seattle market specifically, we have basements. We have a lot of duplexes through duplex, triplex, quadplex. Other parts of the country might not have that. I mentioned I grew up in Florida. We didn't have basements, or at least that's where we would send the people that we really didn't like. And then the duplex, the small multis, there weren't that many. Small duplex, triplex, quadplex, there really weren't that many. So, again, depending on your space in the country, I would say the house hacking is the best place to start.
Yeah, and that's an excellent idea. Obviously, if you can do it, that's a great way to do it. And maybe even the reverse house hack, like we mentioned before, where you just buy a single family in Seattle and then you can build 2 more units right there on your property.
It's funny. That's actually we manage, millions of dollars in multifamily now, and it's great. I love it, but we're still on a slow roll. That's how we're using real estate as a slow roll legacy builder, wealth builder. And we're absolutely in line with that, right? My home in Seattle is in Seattle proper, and I have a permitted detached ADU plans for our backyard. All that I'm waiting for is the treasurer to record it, and ground will be torn up.
And how long did that process typically take?
Oh my gosh. So
too long.
Seattle, again, unique. Typically permitting can take on a normal detached ADU, townhomes, 9 to 12 months. You can expect 9 to 12 months pretty easily. I would say I would not expect anything less than that.
Wow.
Mid-rises, usually 3 to 5 years from a permitting standpoint. The detached ADU that we like is actually a pre-approved construction plan. So the city of Seattle did a RFI, if you will, to the market, the architects here in the city, and said, architects, draw us a set of plans, a set of construction plans that is highly usable, that's appealing, that's low cost of construction, that can house a certain amount of people, that's up to a certain square footage. And they went through this long, arduous process of refining it, and then they started a pilot program. I don't remember the exact time frame, but it was certainly within the last 2 years, possibly 3 years. But let's say it's 2 years. In these permitted, pre-approved permit plans actually is you essentially, all you have to do is take these plans to the city of Seattle with a survey, and they have a very streamlined process where the first one that we got was done and approved in less than 5 weeks. We were breaking ground in less than 5 weeks.
That's awesome.
It was fantastic.
So that's almost an anomaly in bureaucratic, city planning.
Yeah.
I've never heard of something like that.
I mean, we got the stars to align in the sense that the architect had open capacity, take it on. The surveyor had open capacity, was able to get out there the same week. You talk to the same surveyor and they're like 6 weeks out now.
Wow.
But once we got the plans into the city, it was less than 2 week turnaround.
Amazing.
Yeah.
That's awesome. Very hopeful. Okay. Well, I appreciate you sharing that. And hopefully, people do your research. Maybe your city has a similar program, because I can't imagine this is unique to Seattle, although, you never know. It could be, but it's always worth looking into your local, city hall and see what they have to offer in terms of repurposing land or building an ADU or something like that on your property. Amazing. Well, Karl, I want to transition now what we call the final four. These are 4 questions I ask all my guests. First question to you is, what's the worst job that you ever had?
The worst job that I ever had, I worked there for 1 day. I was getting my MBA down in South Florida, and I felt the need to have a side job or a job, make some cash in some of my whatever free time I might have had or thought I had. And I was called for a pharmacy tech position at a CVS or Walgreens, and interviewed, and they said, oh, by the way, this isn't for the farm tech position. This is actually a cashier. And I was like, okay, I'll give it a try. So I show up, and the majority of the people that I talked to as I was checking them out, like, wow, you're really good at this job. Are you overqualified? I was like, I just kind of smiled and grinned and just grinned and bared it. And I couldn't take it anymore. I worked 1 day there. I was thankful, and then obviously called in the next day. I'm like, yeah, this isn't working. And the manager was like, yeah, I didn't think this was going to work at all either.
They just had a position they needed filled, basically.
Yeah. I'll say that I was blessed enough to say that within the next week or two, I wouldn't say a dream job landed in my lap, but it was for a company, the hospital that I wanted to work for, called me with a open position. It was a part-time file clerk job. So it wasn't my dream job, but it was certainly with an organization that more so aligned with where I wanted to be.
Well, that's good. Well, there you go. It's a silver lining for sure to that cashier job. Second question, what's a book you've read that's given you a paradigm shift?
Sure. So this is, and I always butcher the subtitle of it, but it's Bold by Peter Diamandis and Ray Kurzweil. Bold, it's something along the lines of make a big community impact, big social impact, go global, something to that effect. But again, I always get the subtitle incorrectly. It's one of 3 in a trilogy that they've written, or series, I should call it. And it's essentially using technology, exponential technology, to better community around you, and also, go big in terms of making an impact and also building wealth.
Very cool. All right. Well, check that out and make sure to put that in the show notes. Third question, what's a skill or talent that you would like to learn?
That's a good question. I would like to say that I'd like to continue to get better at is underwriting, right? Underwriting is one of the things that I love to do. And that's one of the big values that I bring to our investor group and to the market, is the ability to underwrite. What I'd love to be able to get better at it with is speed. So speed of underwriting, the ability to look at a deal and make a much quicker ability to say deal or no deal. Essentially, as opposed to my proverbial term of I'm going to open up a full underwriting file.
Right.
It's difficult, right? And so I feel like if I could get to a point where I'm a lot more speedy and efficient at determining a deal, I think that would serve everybody around me tremendously.
Sure. And probably comes with just a lot of practice, just doing it over and over again until you kind of see the specific metrics that just jump out at you.
So what I've learned is it's not just that, but it's more so knowing the market. So Seattle specifically, I've got that niched pretty well, right? I understand some of the numbers, the metrics in terms of cost per unit, cost per square foot, you're going in and your reversion cap rate, NOI on a per unit per square foot basis. So I can certainly look at that in the Seattle and greater Puget Sound region. But starting to tap into other markets outside, that becomes quite a bit more difficult.
Sure, 100%. And really, you're absolutely right. It has a lot to do with the market more than anything else. And so becoming an expert in the market is, takes a long time. It does. So, okay, well, good luck with that. Keep it going. And fourth and final question, what does success mean to you?
I think success means to me is the ability to, I guess I'd say the ability to look back over some time period and say, I did everything that I could to get to where I'm at today, right? I was intentional with my time. I spent the amount of time that I needed to do on XYZ task in order to, again, get me to where I want to be, which is, ideally it's where I am right now. And so it's a little backwards looking. So it's a little bit harder to, determine whether or not you're successful.
Right.
And so it's a little less tangible than, a dollar amount, a unit count, an asset count, et cetera. So it's a little bit less tangible.
Yeah, for sure. And, everyone's definition is different, but, it's really more about understanding why you're doing what you're doing and having that hopefully push you to do what's right. Finally, Karl, where can our listeners find you or reach out to you if they want?
Sure. Best place I like is LinkedIn. So that's linkedin.com/Karl-Krauskopf. Please look for that in either the show notes or
don't try to spell it on your own.
Yep. Instagram @Auroras Investment Group and our website, aurorasinvestmentgroup.com.
Awesome. So yes, we'll make sure to put all that in the show notes for our listeners to find it and find you. And I appreciate you taking the time today. It was really nice chatting with you.
Of course. Likewise, Jonah.
And to our listeners, thank you guys for listening all the way to the end once again. And remember, until next time, the best advice comes only when you ask.
Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn, send me a DM, connection request, Yona Weiss, and I'd love to hear from you.